Hey, it's Rocky here, and in this video I'm going to take you through an example of how to know when a trend is ending when you get the repeat of a previous range. And the first example I'm going to use is Telstra, because it had a perfect setup going into a major low and then came out of that low as if it had stole something. So let's take a look at this post from October 27, 2020. I said Australian stock Telstra is in an interesting position where it looks like it is completing a large-scale ABCDE correction. You can see the big picture position in the longer term chart, which is the top one there, and the shorter term chart shows how the final leg down, wave E, has broken down into 5 smaller waves, where wave 5 of E is equal to wave 1 of E. Don't worry, I'll go through all this in detail for you to show you what I'm talking about. And then wave 5 of E, which is the last leg down, has also broken down into 5 smaller waves. When you see something like this, what you're looking for is a reason to get long out of the low, because this is a really good setup that allows you to get set very close to the end of a big trend. And I said a trade and preferably a close above the minor wave 4 high at $2.76 is the initial signal the low is in place. So let's go through and have a look at the big picture chart first. You can see here we had this low on December 24th, big rally up, came up, made a high there, pulled back, and then it rallied through this high and then immediately returned. This is what we call a false break here. So it's come through an existing high and reversed immediately and then headed down. So once you see a false break of something like this and you get some follow through, and we'll look at false breaks in detail in another video, but for now, if you get a break through an existing high or low for that matter, and then it immediately reverses, you're fairly safe to initially get out of any long positions you have here and then start looking for a short position, because fast moves come from false breaks like this quite often. So we had that false break, we came down here, big leg down, not quite 50% retracement, and then we rallied up in this complex correction, A, B, C, D, E correction. Then we started down, we came back to about 786 retracement of this leg down, which is about as far as a retracement is going to go. If it goes much further than that, you're normally going to find it's going to have follow through, but this overlapping pattern here, these swings that are all overlapping, that's what you'd expect in a correction rather than a impulse move. So we came up here, this looks like an E, we started to head down, and then we had another false break here of the high where they had some news event or something like that. Market spiked up through this existing high and then came back down, big red candle. Again, this is what you want to look for. If it starts taking out swing lows here, you can be fairly confident that you've got a false break, and you can go with the downtrend as it was in this case, with a stop loss up above here. Because if you get a false break, comes down, then it goes back up through here, then something else is going on. But as it turned out, this was a signal for a counter trend high, and then down we came all the way down here. Big panic sell-off on news into the 23rd of March. So we've got December, January, February, March was 3 months here. Then we had another year to here. So that's a year and 3 months to the low. That gave us our wave C low. Then we rallied up another complex looking A, B, C, D, E correction into this wave. Now, what you'd expect if this was a 5-wave impulse trend, the market would come down here, it would go up there into a wave 2. This would be a wave 3. We'd have a wave 4 that would go to somewhere like about there, rather than all the way up here. And then we have our final leg down. But in this case, the market rallied up into here, and this high traded within the range of this low here. So it can't be a 1, 2, 3, 4, 5 pattern. Wave 4 of a valid Elliott wave, impulse wave, can't trade into the range of wave 1. So this has to be labeled an A, B, C, D, and then hopefully an E. And up here you don't know what you're going to get. But when you're up here, it's looking like a corrective sort of thing. Had a bit of a rally there, strong rally, could have given you the idea that it was going higher, but then it came up, it stopped there. This is at about 50% retracement, just over 50%, maybe 618 there of this leg down, and then down we went. So once it started down here, we have a 1, 2, 3. This is what a wave 3 looks like. There's gapping, there's a gap there, there's a gap there. That's what wave 3s look like. Came down here into a low, a little wave 4 rally, and then we came down here into what we were expecting was a wave 5 of E. So we got A, B, C, D, E. And that's what I posted in the group. Here, it looks like it is completing a large-scale A, B, C, D, E correction. And this is before it happened, okay? It's on October 27th. That's October 27th there. You can see it's gone just past the date. A day here was the 24th. This was the 23rd. This was the 27th. So it's gone just a few days past our key date, which would have been the 23rd or the 24th. But that's okay. Something else to look at is this low here just poked through the December 24th low. So we put a line across from there. It just broke through. This could be another false break. We don't know for sure. What we need to confirm that is the market needs to start rallying out of here to confirm that we have a low in place. And one other thing, looking at time, we had a high here on the 9th of August, the 11th of February, the 10th of July. You can see that date turning the market there, the 24th, 23rd, 27th. So when you get into these times, and we'll go through time in another video as well, but when you get into these key times, you've got to be on the lookout for a change in trend. It may not happen, but just keep an eye out on these key dates to see what the market looks like it's going to do. So let's go to the shorter term chart now. There's the wave D high. Here's our wave E low. And this is the last leg down. So we came down there, had a ABC correction. Then we had this panic sell-off again, wave 3 of E. You got a gap there and a gap there. That's what wave 3s do. They gap in the direction of the trend. Came down, made a wave 3 low there. ABC correction again into a minor wave 4 high. And then we came down. Now how I knew to be expecting a low somewhere here was when you take a 5 wave sequence, wave 1 of 5 and wave 5 of 5 are often, not always, but are often the same length. So what I did was I took the high to the low, the range, and then projected that. Once this started heading down from the wave 4 high, and you can see the market fell away beautifully. And then this looks like it's done a 1, 2, 3, 4, 5 wave move in here, right down to where wave 5 of E equals 100% of wave 1 of E. All right, so this range here and this range here are equal. This is longer, which is what you expect from a wave 3. So once you get this pattern, this setup where you've got what looks like a 5 wave decline, even though it's corrective, it's still 5 waves. It's not an impulse leg, it's a corrective 5 wave decline. And then you get the last leg down has this pattern in it. And then the last leg down has this 5 wave decline in it. And you're coming into the 27th. Remember, the 23rd and the 24th were back here. We're looking for a low in this market. And here's a post I did on November 9. We discussed how Australian stock Telstra looked like it was completing a 5 wave decline in this post on October 27th. That was the post there, with the low occurring 2 days later. So it happened 2 trading days later. Since then it has rallied, and we could be looking at the start of at least a large ABC correction. A trade above the wave 4 of 5 high, which is wave 4 of 5, this is wave 5 here, will give us additional confirmation the wave 5 low is in place. And you can go to that link there to check out this post in the PDF that comes with this video. So here's that 1, 2, 3, 4, 5 wave pattern. It touched 100% of the range there. You can see that little green up arrow there. That's my entry order there where I got long in this one. And it's rallied up nicely. This is another post a couple of days later. It said, we last looked at Australian stock Telstra in this post a couple of days ago. And in that post I said, a trade above the wave 4 of 5 high will give us additional confirmation the wave 5 low is in place. Today we have traded well above the minor wave 4 high, which confirms the wave 5 of 5 of 5 low should be in place. That actually should say wave 5 of E there, so I made a mistake in that. Either way, it's 3 levels of low in place here. This is another example of how we can use Elliott wave analysis to perfectly time market entries and exit and get set in positions right at the extreme highs and lows of trends. Your financial planner or broker will most likely tell you it's impossible to time markets. As you can see, it's easy when you understand how it's done. There's the link to that post there. And here's the chart, 1, 2, 3, 4, 5, along here, rallied up, made a higher low, and then away it's gone. And you can see it's traded above the minor wave 4 high, which is what I said in the second post. If it did that, that confirms that this is a 5/5 low down in here. Another post a couple of days later, Telstra has continued to rally from the October 29th low, where wave 5 equals 100% of wave 1 in the final decline. That was down here. We originally discussed the setup and our long entry signal in this post, and then followed up in this post 4 days ago. And that's referencing those two posts from before. This is why we always need to be on the lookout for 100% of a previous range in a 5-wave rally or decline. It allowed us to enter long above the extreme low of the decline. So that's the low, got long there. Pretty cool. And it is pretty cool. So when you understand what markets are doing, and you can look at this and go, okay, this looks like a 1, 2, 3, 4. Once you get this high in place here, and it starts to turn down, you can be thinking, this looks like it could be a 5th wave. So you take the range from there to there, project it from here, and just see what happens. Now, as it was at 100% of the range, as soon as it took out this daily high here, so that was the low day, that was an inside day. As soon as it took out the high of that inside day, I got long there, and up it went. And you can see how far this has gone. So if you're down here, and you're thinking this is a low, what could you do? Well, you could use options to go long. You might want to sell some puts down here. You could use CFDs, or you could just buy the stock. Well, there's any number of strategies you can use to take advantage of this knowledge, knowing that there's a high probability that this is the 5th wave in a huge, big ABCDE correction that's gone on for over a year, well over a year. And you get set for this, and a rally like this, you can do really well. And this is probably just the beginning. So this here is going to have some sort of correction at some stage, and then with any luck, it's going to go higher. I'll manage this position here, but there's no reason to sell this until this market decides to roll over. So that's the core strategy of knowing how to get set near a wave 5/5 low, and one example of how to use 100% of the previous range to get set in the new trend. So I'll leave it there for now. Thanks for watching, and I'll talk with you again soon.